Hi guys. So because one of you guys asked, I'm gonna do a trade review. I know I haven't done this in a while, and I think I'm gonna try to do these more often. So today was a perfect day, like that I got funded over $1 million with Apex and my funded futures. So I was very, very confident on this trade. Like this was probably the biggest trade I've taken year to date, including demo, of course, but some live profits as well. So I kind of want to go over it, especially because I'm excited about it. And I can explain it to you guys. So as you guys know, I mark my Asian kill zone, my London kill zone, and then let me delete this. We have midnight price, and we should have 0830 price somewhere. I don't know why it's not showing. Let me look at my settings. It's because of the time. I need to probably replay this. I don't know why it's not showing, but it was somewhere around here. I think it was like right here. 8. We can just mark it manually. Always some technical issues. Oh, there it is. I didn't even have to mark it. Okay, it's right there. 0830. Perfect. Okay, so as you guys know, anything below London low is what I call like a deep discount, right? And especially below midnight. And then again, below 830 price. Um, Today we did not go below 830 price because it was news. So I'll take that as an exception. Price did come back to this specific point, which was like almost 830 price. So I'll take that. So with that being said, I was just looking for buys, right? Because the drawn liquidity to me happened, if you can see, at this specific point, London was sorry. Asia created the high of the day and then London. And I would say that this is like relative equal highs for me. So I'm looking, this is a pool of liquidity resting above these old highs. And then on top of it, if you pay attention to market structure, right? And use the path. Once we created this high, we took liquidity right here below Asian low, which could have been another trade, right? And we failed to break above Asian high. And this is literally my favorite setup. Whenever we do not take Asian high or a London high, and then we start breaking down, retrace, and then we sell below all these old lows. Then again, to me, all of this resting right here is sell side liquidity. So what happens when we take sell side liquidity? We're going to take buy side, right? So at some point, we're going to come back up here. So I look for the drawn liquidity first, and then for the context, right? So what day is today? Today's Thursday, right? So did we take previous day low, which is Wednesday? Let me go to the 15-minute. So we didn't, but we did take this liquidity right here. So it was the 10 a.m. low. Right. But we failed to break these two previous lows, which to me indicates a willingness to go up. So this was definitely a liquidity sweep. So with that being said, now that we are aware, right, that the liquidity sweep happened at 8:30, once the news dropped, we're going to go towards buy side right now. And considering that like Wednesday is going to be the low of the week, we can have a Thursday continuation. Right. And then my aim would still be previous day high. So maybe tomorrow we'll get that, right? Because tomorrow is Friday. So what Friday is, TGIF. We're going to return 20 to 40% back into the range. So I'm already aligning all these things that I know about the weekly with what is price presenting to me, like what we do at 8:30. So 8:30 is acting as 9:30 right now because of the news. So we are below midnight price. We went below an old low from the previous day, but we did not break structure to the downside. And we came back rather quickly, right? So I'm going to turn these off. So now I want you to pay attention right here. So from here on now, I'm just looking for buys. Once I made up my mind that I'm looking for buys, then I have an entry model. Nothing else matters if you do not know what, like, what side of the market we're going to go towards, right? So you build your narrative, build your, find your confluences as far as liquidity goes first, and then time, right? So do not start looking for your trade before 8:30. So it's within our time just because we had news. So whenever we have news, we start looking at 8:30. Most of the time I do not start looking for my trades until 9 o'clock. And then I go into probably, depending on the day, if we have news at 10, I would go up to 10:30 for my entry. So with that being said, I dropped down to 1 minute. And I've been pretty strict with my fair value gaps lately. Like, this to me is not a fair value gap, and I want to point this out because a lot of people ask me this. It's a 1, a 2, and a 3 candle pattern. This third one is not a bullish candle, so it does not form a fair value gap. As per definition, right? If you go back to the 2022, is a 3 candle pattern. Not a 1, not a 2, 3. So I've taken that a lot into consideration. So like if I think this might be a fair value gap, I'll actually drop down to the second chart until I see the 3 candle pattern, which now I have a 1, a 2, and a 3 bullish. So now I can consider this to be a fair value gap. And I already have the 50% marked here on the midline. I don't usually type, but I'll type today. So FEG 30 seconds. Right. So now that we had a liquidity sweep, and then we have price show willingness to go up, right? Because we created a fair value gap. Very importantly, at 8:30, right? So what happens over here now, we trade back down into it. And then eventually we start using the 50% and just trading on the upper quadrant of it, right? So this probably like 25%. So with that being said, I'm looking for, so you could either do one of two things. You could just literally use the fair value gap as your entry, or you could find literally like a fair value gap within the fair value gap, or a breaker within the fair value gap. So right here, you could have waited for the 50%, and then whenever this fair value gap formed, you can get in there because it's within the 50%, right? That would have been an entry. Another entry is that I prefer are breakers, right? And then I would still use, I like to get in on breakers when there's a drawn liquidity. So like this would have been my breaker. And what I do with breakers is that so like, let's just say this is the previous candle that formed this high, right? What I would do is put a buy stop right here. Or you can wait for like price to literally close above it. But I prefer to put a buy stop. Because after we take liquidity and we show the willingness to go up, then I'm looking for a break of structure, and then I can just put a buy stop right here. And right there. And then you can put your stop at this previous low right here, which would be a low that you do not expect to be broken because it swept liquidity. So we swept this liquidity, and then you can see that this was I guess you can call it like an internal range liquidity, right? They got swept. And then price goes up. Right here would be when your breaker is validated. So a breaker is not validated until it actually breaks market structure. So that's why I would put my buy stop right there. And then you can put, like, as you see, you put it on structure. Do not try to like, oh, I'm just going to put it on the breaker, because you're going to get stopped out. Look what happened right here. You would have gotten stopped out. So I hate just putting it on the very last candle. I would put on the swing low. You know, like, that makes a lot more sense to me. And then you can target the previous high, which would have been right there, the buy side liquidity. 65 points. So kind of like a 1, 2, 3. And if you're like me, you could have held this in for, what is that? 150 points on NAS. And that's when I got out, like right here. So I was actually trying to get an entry a little bit closer to 930. So I had like many accounts. I did not see the breaker because I didn't want to be in my computer there early, but I did see the fair value gap. And I want to say I literally just bought it like whenever it dropped to it. Like I put like a buy limit. With the fair value gap is a little bit different because you got to put your stop on the candle that formed the fair value gap, kind of like around there. Like either right here or right there. As you can see, it respected. It did not take you out, and it would not take you out. But it is a little bit larger of a stop because the fair value gap was actually really big, and that would have been a 1 to 2. I mostly take 1 to 2s, or 1 to 3s, but mainly 1 to 2s. Like, I really don't care. It works for me. I rather put my stop at this structure and not get stopped out than to put my stop too small and get stopped out all the time, because it doesn't make sense. Like, my trade idea is not invalidated until we break past this point. So why would I put my stop anywhere inside of this fair value gap? You're gonna get stopped out. And that's, I feel like, where a lot of people are afraid of losing, and they try to put like a 10, 20 point stop and getting like on top of it, and boom, you're taken out because you're not respecting the structure, regardless of how you feel, how much you're risking. And if you're not comfortable doing like a 40 to 50 point stop like I did right here, then this trade is not for you. Just, and then accept it, like, don't try to, I'm gonna put a 20 point stop and just hope it doesn't touch it, because it probably will, so yeah, so I've been using a lot of like limit orders to get me in on the trades. I feel like I can be a little bit more precise with my entries, like I said, especially with breakers. And then if we go up on the higher time frame, like 15 minutes, like, I would not call none of these a breaker. The breaker will probably be up here on the 15 minutes. So if you know that, okay, we took liquidity, because remember, a breaker always has to take liquidity, right here. So this is a higher time frame breaker, right? So your stop is going to be larger. Remember that. With that being said, if you know structure is going to be broken right here, and if you do have this aim right there, right, you could have put a buy stop right there. And I'm pretty sure that's where I added to my position. It was somewhere around here. Stop would have been, since this is a 30, a 15-minute breaker, it's okay to use this whole candle, but like, don't use, like, do not do that on the seconds, the minute charts. Like, that's not gonna hold. And then boom, we got up there. So that's another way that you can do it. If you want to do, if you are not comfortable on the second chart, you can go up to the minutes and use the breaker like that. So you can always just put stop orders, sorry, where the breakers are, like where is going to break market structure, because a breaker is a composition from like sell side liquidity, external sell side liquidity, or I mean buy side, but in this case it's sell side, right? So you want to see a break structure and then come shooting right back up. So if you had gotten in over here, you barely would have gone any drawdown. Right. So the very last candle that formed the high. So liquidity, external liquidity, boom, passed through it, previous high right there. And more importantly than anything is that you want this to happen between the hours, I want to say between 8:30, right? Because that's the 2022 mentorship. Between 8:30 to 10. Maybe 10:30 if we have news at 10. So like, you got to be flexible with it, right? But you want it to happen between those time frames. So whatever PD array you find within the time frame, that's your entry. It really doesn't matter which one you use. Like I was showing, you could have used a fair value gap, a breaker on the seconds or minutes chart, or you could have used a 15-minute breaker and like, boom, look at this. And You can even use a combination of the fact that, okay, this is a 15-minute breaker, and then there is a fair value gap right here on the 1 minute. So now you can also use this fair value gap as an entry with the support of the 15-minute breaker that you're hoping to hold. So like now you have a higher time frame PDRA within, oh, sorry, you have a lower time frame PDRA within a higher time frame PDRA to support it. Within the hours of 8:30, at the very least. Let me change that. And 10:30. So whatever PDRAs you find from here to here, right? It's up to you. Like that is an entry model. But the first thing that you got to decide and figure out is that we already took sell side. So price is ready to come shooting back up and mitigate and take everybody out. So your job right here, once you decide that, okay, so we sold through the whole night, you know, during London, we're going to reverse. And then, okay, one PDRA, you know, two PDRAs, there's another fair value gap right here. You could have gone in right there. And so on and so forth. So, yeah. I don't know. I don't think I have anything else to say. But yeah, so this is my analysis. This is how I was thinking throughout this trade. So you always want to, and I want to put emphasis in this, is like timing is everything. If we have a news at 8:30, like be there at 8:30 to at least see what price is doing. And then, you know, we have a second news driver, right, at 10. So in one of ICT's mentorship, he said, when you have a second news driver, you want to wait into the second news driver drops before getting into the trade. I did not do that, but it's because it's going to reverse. So I also caught the sell. I actually forgot about that little detail. So because we had this previous high right here, I actually needed $3,000 to pass one of the accounts. So what I did was, looking at the 1 minute, boom, okay, we took external sell side liquidity, then we took the previous high one more time within inside of the range. Now what? Like, where is my breakup structure? It's right here. And I actually put sell stop right there. And then remember, these bullish PDRAs do not matter anymore. Like, we already took those out. You can target any of these previous lows over here to your left. Like all the swing lows, this is all liquidity, right? So let me mark the breaker for you on the 1 minute. It would have been right here. And there you go. So now we can use the whole breaker right there. So like a 30-point stop. And then you can target, you know, any of these previous swing lows. I would take 50% here because that is definitely a liquidity point and we could have like shot back up. So over here for 146, I would have 100% gotten out right there. I would not wait for this one for the 200 points unless I was feeling really fancy. I don't know. I think we actually end up going back down there because we can also say that we have an AM liquidity So that happens a lot too. We tend to take the AM high or low. Yeah. And now I don't doubt, not even a little bit, that tomorrow what might happen is we're going to take one of these. We're going to take one of these liquidity pools right here for sell side. And we're going to shoot back up. Look at this relative equal highs right there. And forget about the breaker. Look, we already sold from it. So like, that's already mitigated. You do not look for the breakers after the fact. Like, once the move already happened on the first half of the day, unless you're going to trade the PM session, like, you want to look for the PDRAs that are happening within the time you're trading. But anyway, being that it's TGIF tomorrow, possibly, I think we're going to do something along the lines. I don't know which one of these we're going to stop. Like, that's the thing. I do not know. You need to pay attention. Which one of these we take at 9 a.m. or 8:30? That's the one that you want to choose. Is the one specific to the time. So 9:30, let's just say tomorrow, we take the second one. That's the one you're going to look for. You're going to drop down to the second chart and see a rejection. You see a market structure shift on the 15 seconds, 30 seconds, 1 minute. That is your cue that you're now looking for your entry. So you put time before everything else that you do and liquidity second. Nothing else matters. If you want to just straight off liquidity and do what is it called? I even forgot, like just literally just getting like in a turtle soup, you can't. You know, you don't have to wait for confirmation. You don't have to wait for a fair value gap and a breaker. But I prefer to, but that's why I dropped down all the way to the 15 seconds or 30 seconds to look for it, because I already decided that that is the specific point that I want because it happened in 9:30. Right? So now I'm looking for this to happen. Because now this just became previous day high. So previous day high is one of the liquidity pools that I also look for, right? So now I might not get this whole move, but I might do. And it's a 300-point move. And then all you have to do is look for an entry however you want to do it at 9:30 or like right before. I want to say like 9:15, like 9 o'clock. Sometimes it happens. You have to be flexible. Sometimes it doesn't happen to 10:30. So like I do like to use that window of time and then see when we take liquidity. Most of the time is like right before 9:30, sometimes a little bit after 9:30, sometimes at 10, depending on the news. So you want to wait for liquidity grab first and that window of time. And then as soon as liquidity grab happens, you look for your PDRA or you turtle soup it. So it's literally that simple. I marked that wrong, but it's like right here. There you go. Like any of these swing points is going to be what you're looking for as far as liquidity goes. So I mark all of them so I can train my eye. I don't do that anymore, but when I was trying to train my eye, every swing point, up or down, I marked it. That way you can tell, like, you're not just like, which swing point is it going to be? Which old low? Wait for the time. And then when you get a reaction on the second or the minute, and you have a market structure shift, like so, or like so, you can just get in. And that should be protected, right? Because now this is a breaker right there, and then we formed an order block. So once we form that order block, you already know that now this is all protected, right? So it depends how you see the market, how you see your breakers. That's how I see mine. And yeah, so, and this is already the chart with everything that I'm looking for tomorrow. So yay, we did an analysis for tomorrow already, and is an FB. So it could be a little bit more aggressive. We could take previous day low, very much so. I actually like this idea very much. Yep, previous day low, wipe all this sell side liquidity one more time, take everybody out, and boom, shoot up to previous day high. I think that's what is going to happen, because then we're going to trade back into the range for Friday. And then guess what? I've been actually looking at this fair value gap that never got filled, like literally never got touched. And I think that might be where we're going to go tomorrow. And what aligned with that previous day high. So now we're talking, you know, a 400 to nearly 500 points possible move. And all you got to do is take a piece of that, is find one entry within that, right? So yeah, I might post this on YouTube YouTube as well. A lot of people have been asking me to do trades breakdown, and I think this was a really good one. So I hope you guys enjoy. I'll see you. I don't know when. I'll see you later. All right. How do I stop?